Hey everybody, thanks for watching. Today I'm going to share with you the story about the $34,000 pack of gum. Now this is not a story about egregious overspending. I think about GoldenPalace.com when they paid $28,000 for the grilled cheese because it looked like it had the face of Mother Mary on it. It's not that kind of story. It's a story about someone who paid a couple bucks, and because of that action, they received $34,000 in value. Now, I know some of you are skeptical, calling BS. If I didn't see it with my own eyes, I wouldn't believe it either. You know, if I didn't make it happen, I wouldn't believe it. But it did happen, and I'd like to share it with you. Let me lay the foundation for you. We're talking about a borrower who has a 675 FICO score. So, pretty good score. It's not perfect, but you know, we can work with that. They currently have a 5.25% rate. So they're in a condo. There's a few moving parts, but we can refi them into a new 4.625% interest rate. We can get rid of their mortgage insurance, and it's a happy story. But let's check one thing. Let's check, what if their score was 680 instead of 675? Now, if their score was 680, their rate would be 4.25%. So it's just 5 points, but it's a big difference. Why is that? Now, it has to do with what's called loan level pricing adjustments. There's adjustments based on one of those things being your FICO score. I'll put a couple of examples up of what's called loan level price adjustments. It just so happens that that 680 price points, it's a pretty important level. If you're at 680 or higher versus below 680, you can have a point difference in your pricing. So some of you are thinking, if you put yourself in the borrower's shoes, okay, I have a 675 score. That's great. If I had 680, it would be better, but I don't have a 680. And so why are you even telling me this? Are you just trying to like rub salt in a wound and make me feel bad about myself? Or, you know, let's do the refi. You don't have to tell me about, you know, what coulda, woulda, shoulda. It's at that time that I usually put on my Superman cape, because by opening accounts, by maybe closing an account, by paying down an account, you can, while you're in escrow, make adjustments. If they benefit you, re-pull a new credit report, and if that score goes up, you can use the new score. For my borrower in question, there was a very simple solution. So they had a Home Depot card, which had a zero balance. They hadn't touched the thing in 8 months. It was probably in some sort of drawer. Never used it. Just had it open. No annual fee. They just zero balance. Well, one of the things that's factored into your credit score is your ratio of available credit to the amount of credit you're using. So in that case, you would think that that card would be beneficial because there's a credit limit on the card. The balance is zero, so there's that available credit. However, some cards, if you haven't used it in 6 months, it goes quiet, for lack of a better word. So it doesn't count as available credit. So we need to ignite the availability of that credit. And the easiest way to do that is to buy something that's between $1 and $10, have it reported to the credit bureau, re-pull a new report. So that was all we had to do. So I told the borrowers in question, I said, your score's 675. We can definitely improve your rate over 0.5%. We can get rid of your mortgage insurance. So this is a deal worth pursuing. If you do one little thing for me, I can get your rate to 4.25. And they said, well, what's that? I said, I need you to buy a pack of gum. And they just go, huh, what? I said no. So I just said, I need you to buy a pack of gum. I need you, buy anything, but a pack of gum comes to my mind. That's between $1 and $10. I want you to buy it with that Home Depot card you're not using. And then I want you to log on once that charge hits and print off your balance. Show me a number between 1 and 10. And I'm going to report it to the credit bureaus. They're going to update it. We're going to pull a new credit report, and your rate's going to be 4.25. And they said, okay, yeah, I can do that. No, they were really excited. So they did it. The score went up to 687. So we got an extra 7 points we didn't need, but we'll take it. And the rate dropped by 3/8 just for that simple action of buying a pack of gum. So you might be wondering, when does the 34,000 come in? Like this all sounds great, but don't get it. Well, I'll break it down for you. At the higher rate, 4.625, the monthly payment's going to be $2,185 a month. Then at the lower rate, the 4.25, the rate is $2,090 a month. So between those two payments, it's a $95 swing, $95 difference. So over 360 payments over 30 years, that totals $34,200. So that is the story of the $34,000 pack of gum. I wanted to leave you with 3 takeaways. And the first takeaway is that not all points are created equally. So if you're at a 660 and you do something to get to 679, that's a total of 19 points. That will do you no good. Don't bother. But if you're at a 679 and you get 1 point to 680, that's gonna improve your pricing by 1 point. So that's a big improvement. So not all points are created equally. Also, in our example, we spent a couple bucks, but essentially for no cost, we're able to pick up 12 points. And there's other times where you need to get 3 points and you have to pay some credit card down by $2,000. So what you need to do to get points varies as well. So it reminds me of a funny story. And so it has to do with my dad, and we were around some friends. This is before cell phones and having all the answers you needed at the tip of your fingers. And someone said, how many miles do you think it is to the moon? And my dad said, oh, it's 250,000 miles. Like, boom. We were like, we couldn't even know if he was wrong, or right or wrong. And my brother's friend Scott said, how'd you know that? He's like, Scott, it's just one of those things you need to know. And I just thought that was great. But as it relates to your FICO score, it's not one of those things you need to know. It's one of those things that I need to know. It's one of those things that I know. So just work with a professional, and these types of things will be covered for you. Now, the second takeaway is that I just wanted to educate my viewers about that this concept is available, that you can rescore in the middle of a transaction. Like some people have a hesitation to engage a loan officer because they don't want their credit pulled, because they want to do a couple things first. But your best bet is to engage a loan officer who will work with you to improve your score if they can. Not every loan officer will do this, and I'll tell you 3 reasons why they might not. So number 1 is that the lender has to pay for it. This comes attached to the second credit report. Reminder, per our contracts with the major credit reporting agencies, the cost of a rescore cannot be passed on to the borrower directly or indirectly. Passing the cost of a rescore on to a borrower is considered by agencies to be a violation of FCRA Section 611. So I don't know what that section is, but it sounds like something I don't want to mess with. So basically, a lender needs to pay for the rescores, and they can't pass it back to the borrower. So that might be a reason why they might not be telling you about it. Now, the second reason that you might not have heard about this is, for lack of a better word, is maybe laziness. So in my example at 4.625, I had a loan where I can improve the borrower's rate by 5/8. I can get rid of their mortgage insurance. They were happy, and the path of least resistance was to turn in that loan and run with it. Now, it's more work to do the research to see what we need to do, to go to the borrower, explain to them what they need to do once you figured it out. Then you usually have to help them get the proof, and then you have to submit that proof to the credit agency to update it, and then you have to pull a new credit report after you've waited 3 to 5 days for them to do their thing. So there's definitely steps, and it's a little bit extra work. So that could be another reason that a lot of people don't know that this exists. The third reason you might not know that this exists is because your FICO could get worse. So if you pull another report, some lenders will track those credit pulls during the transaction, others don't, but in all cases you're supposed to use a new report that's pulled. So if you maybe did something to improve the score, but some other input got worse, your score could go down and you would need to use the lower score. So it's not without risks. I don't know if that's a reason that people don't tell borrowers about it, but it's a risk that should be disclosed. And then the final takeaway is that credit's important. It is so important, and I'm on the front lines, so I see it. And I see people who have good credit, and the opportunities are open to them. They have low down payment programs, they have down payment assistance, their rates are good. And then I've seen the other side too, with people with bad credit, their interest rates are high, they're turned down. There's doors open to people with good credit that are closed to people with bad credit. So if I could give you one takeaway, it's that you should make your minimum monthly payments on all of your credit liabilities every month. So don't like, hey, I'm gonna attack this bill and I'm just gonna put everything I got at it, and that one's going down successfully, but these others have lates. Just make all your minimum monthly payments, and then with the excess, you can pick and choose where that extra goes, but every month, a minimum monthly payment on time. So during the transaction, we can open accounts, close accounts, pay balances down, buy packs of gum, whatever we need to do to make your score go up. But what we can't do is remove late. So once there's a late, the only solution to that is time. Thank you for watching. I hope you learned something and maybe were slightly entertained. If you're still here, if you don't mind, please give me a like. That's a thumbs up. If you can, subscribe. It's really easy to do if you have a Gmail account. If you're logged into Gmail and you hit subscribe, it's really easy. And if you don't, then there's another step or two. But if you subscribe and hit the bell, you'll be notified of any future videos I make. So next time you should buy a pack of gum, think about that $34,000 I save my clients. I know I will.